Betty. Good morning, good afternoon, good evening, depending on where you're at on this beautiful planet. I hope you guys had a wonderful weekend. Hey, Lorna, Cody, Laura, Mirza, great to see y'all. Jill, you as well. I hope you guys are having a good day. Jason, same to you. So let's go ahead. We'll dive in here. Hey, Ricardo, and we will get started on our Monday morning update for today. Hey, Chris, SK59, Nomofomo, good to see you. So, starting with SPX this morning, as we can see, we got a little bit of a bounce higher here at the open, but immediately started to run into some intraday resistance levels. I know I was talking in the chat with Laura earlier that if we could manage to get above the 4510-ish level, which you can see is right by both the 100 period simple on the 5-minute chart and the 100 period simple on the 10-minute chart. So and of course, a little bit of a cluster of moving averages here on the 10-minute. If we can break above that level and try and keep some of this bullish strength to the upside, then there's a good chance we'll go up towards 45.25. That's the next level on the hourly chart. That's also a psychological level. So it certainly wouldn't be out of the question. And then, of course, if we can manage to break that, I do think the ATR trailing stop and basically the highs that we had on Friday, right around 45.40, would also be in play. But as you can see here, we're kind of struggling, right? We're having a hard time breaking above it. The Bollinger Bands on all our time frames are either flat or in consolidation. So at least as of right now, they're not anticipating a break higher. Now, of course, on the smaller time frames like the 5 and 10, that can easily shift. But the hourly chart remaining flat to me means that if we do end up breaking higher, I probably, at least at this point, given how everything looks, wouldn't play much past the high that we had Friday. At the same time, it's doing a good job of not immediately giving everything up. However, if we do end up printing this bearish divergent bar, if we do start to roll over, which could happen at Europe's close, which is at 10:30, then we could see a reversal back down, certainly to the lows of today. That wouldn't be hard, right? That's 44.90. But my next bigger target would be closer to the 44.80 range. Now we do have 44.90 as a technical support here on the 5-minute chart, right? But if we manage to break that on this rollover kind of situation, which looks like what it's attempting to do here, still a little early to call that, but it looks like that's what it's attempting to do. Then 44.80 and certainly maybe around 44.75, that psychological level, would be good targets to play to the downside. Notice how momentum had a great reset, but isn't crossing above the zero line on the 10-minute chart. So if we start to get red bars here, that's a good sign it's going to start to roll. We have bearish signals on the compound breakout tool on some of our smaller time frames. Momentum on the 5-minute chart is starting to pull back, still above the zero line, so that adds a little bit of bullish weight. But if it crosses below the zero line, that would be in line with the bearish sentiment that we're looking at here, as well as, of course, the momentum on the hourly charts definitely below the zero line. Definitely has room to move lower. Red bars, right? All of that adds to that bearish weight aspect. We do have a slight bullish signal on the compound breakout tool, but remember, when you're in a bearish trend and you get a reversal signal like this, it's first telling you that you're going up to test resistance. And then if you can manage to break resistance, then you play into the next level, right? Until you get past all of them. And ideally, right, if this remains valid, you go into a bullish trend signal. But currently, we've run right basically into the 10 period simple, and that's holding as resistance. So I wouldn't be too surprised if this started to cancel back out and either gave us a bearish signal, which is in line with the trend, or starts to go into a more consolidating signal, because like I mentioned, the Bollinger Bands here are really flat. So unless these start to open lower as we press to the downside, we might not get much of a break below Friday's low. Everything's kind of muted this morning. Now, part of the reason that it could be muted today is because with what Pal said and mentioned, right, that everything, of course, I mean, it's the same line he's continued to give us, right? Everything is data driven, data driven. But it seems like people are looking a little bit more to those numbers. like we did last year, right? Compared to, I would say earlier this year, and let's pull up the daily chart so you guys can have a better aspect of what I'm talking about here on SPX. But of course, last year we had a lot of volatility, right? This day I can clearly point out that was the day CPI came out. And you can see the market reacted first negatively to it, then rebounded almost at a 200-point range for the day. So a lot of volatility, a lot of move around news events, around the Fed speaking, everything else. But this year, right, all of that has been a lot more muted. The daily ranges have gone back into what you might equate as a more normal daily range for the market, especially in a more bullish trend tendency. And of course, uh, the way that we played CPI last year, right, and a lot of those data points, it hasn't equated to much this year, right? They've been a bit more of non-events, and I think that's a part of the reason was because a lot of people, and you saw this in the Fed futures, right? A lot of people were pricing in the possibility of a rate cut later this year in the fall, like maybe around, the end of the year, like November. But now that's off the table, right? Powell's made it pretty clear in the last couple of meetings that they do not intend to do any sort of rate cut. It will either be a rate hike or it will be a pause this year. And maybe next year we could start to see some rate cuts again. But that kind of dashed a lot of people's hopes, right? A lot of that potential cut aspect that was priced in earlier in the Fed futures isn't there anymore. And so because of that possibility, it does feel like we're in a situation where we might be getting a little bit more focused on the data. So I don't know if I'd play necessarily for the volatility that we had last year. I'm still a bit skeptical that we'll get, those kind of daily ranges again unless there's a catalyst for it. But I do think the reason why we're not seeing much of a range so far for today, right? It's a 19-point range, certainly not the ranges that we saw on Friday or at the end of last week. And I think a part of that is due to the fact that later this week we have CPI. And I believe also, correct me if I'm wrong, guys, but PPI data coming out. I know CPI, I think, is on, let me double check, but I believe that's not coming out on Thursday. Quick look at that market calendar again, just to make sure I'm speaking the truth here. Yeah, so CPI is Thursday and core PPI is Friday. Both of those are inflation reports. So it might be a case where we're, a little bit more focused on how those reports announce and whether or not they're going to be valid. We do have some Fed speaking tomorrow. I'm personally not putting much weight on that. We'll see whether or not, we get the volatility. Last year, it seemed like any Fed that opened their mouth, whether it was at a Fed meeting or outside of it, caused the market to move. But this year, that's not been the case. Even when Powell spoke, we might get a little bit of the intraday move, but it hasn't, shifted into a trending move or a big pullback or a big, reversal to the upside. So, especially if it's not Powell speaking, I'm not putting a lot of weight on Tuesday's Feds that are speaking that day. But initial jobless claims Thursday, CPI Thursday, PPI Friday, consumer sentiment Friday. I think all of those might be reports that the market pays a little bit more attention to, and could help bring about the catalyst of either us holding here, right? If the reports are what the market wants to hear, keep in mind, and I know I say this a lot, so for some of you guys, it's going to be a repeat, but certainly for anyone who's new or needs the reminder, as a retail trader, right? As somebody on this side of the trading desk, especially when we're doing options, we're not doing this as like long-term stock or share investments in our account or anything like that. We don't really care necessarily what the reports are. Obviously, it's good to know what that is from an, the economy point of view and how the US economy is holding up. But from a trading point of view, we don't really care what the numbers are. What we care about is the market's reaction to the numbers. And so that's really what we want to see here. Does the market react positively to the reports that come out later this week, or do they react negatively? And so if they start to react negatively, that could be the catalyst for a stronger pullback because we did test 4,600. We weren't able to break above it. Now, typically when I see this setup here, On a daily chart, this is actually usually a pretty clean pullback entry to start looking to get bullish again. And so, what I've been doing this morning is just watching 4,500 to see, do we hold this? Do we pull back? If we pull back, we have the ATR trailing stop from a daily perspective at 44.64 that we could go down and test. Notice that the Bollinger Bands aren't flaring open yet, right, to the downside. So, they're not anticipating a strong break of this level, at least as of right now. But it could be the catalyst for a stronger pullback. And the reason why that's possible is because, from the technical perspective, we're right near exhaustion levels on the weekly chart. And we've talked about this the last few weeks, how we've been kind of near the top of this range. Now, on the indexes, it's not hard to stay up in this range and maintain a bullish trend. Sometimes all you're looking for is that pullback into the 10 period simple or that consolidation into the weekly 10. You get a little bit of a pullback on momentum, and then momentum picks up for that next leg higher. And that could very well be what's setting up here. Technically, this bullish signal may or may not cancel out this week. It's still looking pretty strong right now. We'll see how this looks on Friday. But notice how we're right at the 10, and that's kind of where we're stalling. That level's at 44.50 on the weekly chart. So it could be a case of it's attempting to hold here. The market reacts positively to the news, and we bounce and we continue the trend higher, which in that case, this is now a time to start trying to look for those pullback entries for bullish trade ideas. However, we always need to be a little mindful of exhaustion. And given the fact that 4,600 is also right by the highs that we had in March of last year, with the top of that high being 46.37 and 30 cents, we need to just be a little cautious about how we react to this level. Because, of course, if the market reacts negatively to the news, that could be the catalyst to have the price break the 10 and start to get a stronger pullback, which could in turn, of course, lead to a stronger pullback from bullish exhaustion levels. And of course, cause the underlying price to get a little bit more of a dip to it. And so that's kind of what I am wanting to see now. I might have to be a bit patient on that. It might mean, until we get to the CPI news, we play just the levels on the intraday charts like we're talking about here, where if we break, we play up into this range, take it for a quick scalp, vice versa. If we hold and it looks like it's reversing, then we take it to the downside for a quick scalp, and just keep our capital a little bit more in cash until we get the confirmation about whether or not this is starting to create a pullback buy for us to jump in on, or if we need to start maybe adding some bearish trades to our mainly bullish account and even it out a little bit more, so that way there's a little bit more evenness between the two sides. And if we do start to break, we have trades that can help offset the bullish trades and still keep us nicely net ahead. That's the idea. Hey, Sharon, Charles, good to see y'all. So that's kind of what I'm watching for this week. In regards to setups, and I mentioned this earlier in the chat, I have been scanning for some setups because I'd really like to jump into some stuff, but I just haven't seen too many clean setups that I really like. And it could be a case of everything starting to reset and pull back to give us those setups, right? So we just need to keep an eye out for, are things just trying to reset themselves to give us that proper entry to take? Or do we need to put the bullish shorter term trades on pause to try and, maybe anticipate a bit more of a stronger break to the downside? And so that's what I'm watching for right now. To me, like I said, this looks like a decent pullback buy, but I'd like a little bit more confirmation of that before piling in with my capital for bullish trade ideas. Now, that being said, there is one that I have been eyeing for a bullish trade idea. So let's pull it up here. It's on MBDA. The reason why I like this one for a possibility, there are actually a few reasons. So let's walk through them. So, first of all, very similar to SPX, right? We pulled back off the highs and we're hanging out here. Momentum's had a beautiful reset to the zero line, hasn't crossed below it yet. So if we can start to get some green bars in a row, right, building up, that's a good sign that we could start to at least get a retest of the price level here around 475, if not maybe a run higher. We do have a recent true low on the daily chart, which is this small box down here. The last time we had a signal on this indicator was back in January. And you can see the run up that happened after that printed, right? That was a beautiful run to the upside. So we haven't had one of those on the NVDA in particular print in a while. And now we're getting one. So that's usually a good buy in spot for a longer term trend. We have a low compression squeeze setting up. So that, helps out with the potential energy of a move trying to get to the upside and could give us the catalyst to break this price resistance up here around 475 and continue with the trend. Still more consolidating signal in the compound breakout tool, which matches, of course, with the Bollinger Bands. It matches with the moving averages flattening out. Still naturally a bullish trend with the moving averages. But when they start to flatten out like that, there's always that possibility of consolidation, kind of like what we saw back here. But another reason I like this is because earnings is coming up. So, of course, a lot of our bigger names have already had earnings. We've seen the reactions, right? Apple, Tesla, um, Netflix, for example, all reacted kind of negatively to their earnings. We had Amazon and Google that bounced up, nicely off their earnings announcement. So it's been a little bit of a mixed bag in regards to like the bigger components of the market, if you will. But typically speaking, going into an earnings announcement, not always, but there's a good chance that the price will either hang out within this range, right? Consolidate, build energy into that squeeze. And then earnings is the catalyst for a bit more of a volatile move, which is something we have seen this earnings season with those gap moves up or down. But the other thing that can happen going into earnings is that you actually trend higher into the announcement, right? It's like they're pricing in that possibility of it being a positive move. And so the underlying price starts to run higher into the news itself. And then the news gives us the catalyst for either an extra push to the upside or a reversal back down. You can see kind of happened last time, right? We had the consolidation and then we had that slow grind higher into earnings. And then earnings, of course, caused this huge bounce. And so I like all of those components from a daily perspective. I like how it's holding up. I like that we've had the pullback for a potential entry here to play back into the top of this range. Everything has had a great reset. So if we could start to get bullish signals down here, kind of like what we've seen in the past, that could create for a good entry to play back for a bounce. The only reason why I haven't jumped into anything just yet, because I was actually looking at this last week and debating about jumping in. And the reason I didn't do it on Friday last week is because we started to make a bearish divergent bar on the daily chart. So if we had gapped lower this morning, basically one, I didn't want to, jump into anything Friday that we could have gotten a better price on today. And then two, if we really were selling off this morning, right, and like breaking the ATR trailing stop, let's say NVDA had some bad news that came out, kind of like, at least from what I saw, Tesla looked like earlier, right? That one was, yeah, it still is. It's down $9. So if it acted like a Tesla this morning and was kind of moving lower, right, you wanted to be prepared for that about, maybe not even doing a bullish trade idea. But the reason why I haven't jumped in this morning is because when I pulled the intraday charts, which is what I've been watching for this entry to see if I want to jump in currently, is we've been running right into 1 hour resistance. And even though this morning had the nice pop up, the follow through on that bullish divergent bar and move higher, these Bollinger Bands really weren't trying to move whatsoever from what I've been paying attention to it, right? They've maintained relatively flat. And right above that, of course, is both the 100 period simple and the ATR trailing stop acting as resistance. So I didn't want to come in here and try and force a bullish trade, knowing that we have the Bollinger Bands not anticipating a break higher, at least as of this point, and we have those intraday resistance levels right above us. So I'm waiting to see if this ends up pulling back again. If it does, but holds maybe the price support around 444, right? 444 or 440 range, and the Bollinger Bands aren't trying to flare open to the downside on the intraday charts, then that could give us a cleaner entry and give us, of course, a lot more room to play for a bounce to the upside on the intraday, let alone on the daily chart. So this isn't a setup I'm eyeing. Another reason why I like this setup is based off the weekly chart. So let's go off that. So the weekly chart, few negatives to note here. First of all, we are definitely at the top of our axis with a couple of red bars printing in a row. So that's a sign of exhaustion, right? We also are attempting to print a pullback signal. We'll see whether or not this remains valid into the end of the week, but obviously don't really want to see a pullback signal when you're trying to look for a bearish entry. What I do like though is, of course, this is a very strong bullish trend. The Bollinger Bands are still opening up. We still have the 10-period simple acting as support. Of course, all that bullish sentiment that I mentioned going into earnings on the daily chart I liked. But we also have a recent bullish divergent bar, and that's what this alert is for up here at 473.95. That is the high of this bar. And for those of you not familiar with this indicator, basically a bullish divergent bar gives a good probability of potentially getting a higher high within the next 3 bars that print. So on the weekly chart, that means the next 3 weeks from where this bar printed, there's a good chance we'll at the very least go up and test this high, if not follow through with a higher high. And you can see that happen back here. You can see it happened here off this bullish divergent bar. That one followed through with the higher high. That one got the higher high follow through. That one took 3 bars for a stronger higher high, but you can see that happened. And I could keep going back, but in short, the follow through rate on MVDA on the weekly chart for bullish divergent bars, meaning out of the last 5 years, which is how far back my weekly chart goes. In the last 5 years, we've only ever had 2 bullish divergent bars that have failed to follow through within the 3 bar rule, right? The majority of them have gotten at least some sort of test of the high of that bar, if not a stronger follow through for a bounce. And so that means, right, this has a good probability of following through. Now, does that mean it's 100% going to? No, right? 2 out of the last like 48 or whatever that have printed in the last 5 years have failed, right? So no matter what, we still need to go into this with the idea of being mindful of our capital risk at the very start of the trade. But obviously, a 95.74 success rate is not a bad way to go about putting on a trade here. So those are the reasons I kind of like the idea that we could at least go back up towards the top of this range and test it for a bounce. The one thing I will point out, right, just to play devil's advocate with myself, is the fact that usually if a bullish divergent bar does not follow through, it's either one, because it's a counter trend signal, meaning it's a bit more in a bearish trend. So it has less of a probability of following through compared to a bearish divergent bar, right? Which gives us that better probability of finding a lower low rather than a higher high. But the other side of that, the other time that the bullish divergent bar may not follow through, at least from my experience of using this indicator as much as I have over the years, is when you're literally at the top and you're at exhaustion levels like this. And it's a case of it's not following through because everything needs to pull back and reset, or it's consolidating. You just never get that strong follow through with the higher high. And so that's a little bit of my caution on this one is, yeah, we are certainly have seen a beautiful run up. We are clearly starting to see some signs of exhaustion on momentum. And so, once again, we need to be a little bit mindful of the capital that we put in here if we decide to play it, just for that possibility that this could be the 3rd bar out of 5 years of the bullish divergent bar that's printed that doesn't follow through, right? We have to accept that as a potential possibility. Now, that being said, I think there are some great risk versus reward trades we can look at. One of the ones that we looked at last week, which is technically a small profit compared to what we saw, was an unbalanced butterfly, right? The idea that we maintain holding daily support. We put our short strike at that level with the idea that we are not going to break below the 30, which is at 442. And we use this as a premium theta decay style trade. And if it does pull back into the 30 but hold it as support, the butterfly portion of this unbalanced butterfly makes for an excellent risk versus reward scenario. So that was one of the ideas we looked at last week. I think when we looked at this, it was around like 95 cents to $1. So it has a small profit on it. Part of the reason you're not seeing a huge crush in theta decay is one, NVDA is pulling back currently on the price compared to where it opened. And or from the bounce up that it had today, right? It's pulling back off the highs. The second thing though is, given the 3-bar rule on the weekly chart, you, or at least I, really want to go out to next week's expiration to make sure I give it the proper 3-bar time frame. And so because there's a lot of time on this trade left, the theta decay isn't going to work as quickly in our favor. We're either going to have to just sit tight on this and basically look for it not to break the 30 period simple. And as we get closer into August 18th, that theta decay will, the premium will get crushed and it will leave. Or we actually need a stronger bounce up for this to move further out of the money. And once again, that crush in theta as it goes further out of the money means it has less probability of getting to those strikes and in turn allows for profit that way. So that was one of the ways that you could look at it. But for myself, I'm very much more a directional player. So what I'd prefer to do is something along the lines of either a vertical or a debit broken wing butterfly. Now, like I said, I'm not putting this on yet because, of course, if the market is looking like it's going to roll over here, which I think that there's the momentum bars, right? So we're starting to roll off the zero line. That's a bit more of a bearish trait. Still flat on our Bollinger Bands here, but you guys get the idea. If this starts to break and roll, I don't think MBDA is going to do a good job of holding up either, given that its hourly chart looks a bit similar in regards to its stalling at this range. So I still want to be patient on opening this trade idea, but what I would be inclined to look at is some sort of bounce to play back either into this level. Um, yeah, really just into the level because we have a lot of room to play into that range. So the first way we could go about it is just put on a pure vertical spread, right? The 455, 460 currently is at a $2 cost basis, $3 profit potential. Not a bad risk versus reward necessarily on a 5-point spread. And certainly, of course, compared to our target at 473, we wouldn't even need a bounce all the way to the upside to follow through on that bullish divergent bar to allow for a profit. Um, we could, of course, move our strikes a little bit further out of the money, right? Give ourselves a little bit better of a risk versus reward scenario. Certainly, there's a lot of open interest here at 470, so that's a possibility. We could also narrow the spread, right? Do a 2.5 width spread. That way, we have less capital risk on board, right? To be cautious of what we talked about with the weekly chart being at exhaustion levels and still have a good risk versus reward scenario intact. So on this, for example, the 465, 467.50 is about a 77-cent cost basis, 175, 170 profit potential, depending on your fill there. So not a bad risk versus reward. Or we could consider something along the lines of a debit broken wing butterfly. And for those of you who aren't familiar with the debit broken wing butterfly, it's very much like a standard butterfly, but instead of the debit spread and the credit spread sharing the same width, right? In that 1-2-1 contract scenario, the debit spread's actually wider. So this, for example, would be a 10-5 butterfly. If we get up to 473.95, we'll be past our short strike. So if we go up, tag it, and start to pull back, certainly with the open interest here, that doesn't seem like a bad spot to play up into. And it's $1.95, 805 max profit potential. Excellent risk versus reward. Now, of course, if it gets a really strong move, right? Let's say the news later this week, the CPI, the PPI data comes out. Everyone likes what it has to say. The market gets a strong bounce. NVDA follows through. We start to go for that run up into earnings, not just a test of price resistance, but actually a continuation back into that bullish trend. Let's say we're heading towards 500 prior to the announcement. Well, if this goes completely in the money, it still allows for a profit potential of around 305, 310, because 10 points of the debit spread, which is what the value would be if that goes completely in the money, covers the 5 points of risk on the credit spread and leaves you with a leftover value on the trade of $5. So that is not a bad risk versus reward. And Ivan, I do have an article I can point you towards to help you out in trying to get and upgrading your account. I know we've talked about that where obviously you usually need a margin account in order to trade spreads. And so people have asked about that before. So I'll send you a link. I did a blog post a while ago going through the steps and how to try and make sure you get accepted as a margin account. Not that I would say use the margin. Obviously, if you're newer to trading, you want to stay within your risk tolerance and everything else. But I myself, I have margin accounts. I don't touch any of the margin. I only trade with the capital that I've actually put in there. And so if you plan to do it like that, I don't think that's a bad way to go about it. But yeah, so I like this trade too. Not a bad risk versus reward. Of course, once again, if we want to reduce the risk, we could do something like a 7.5 5 point width spread. It's $1.05. 645 max profit potential if it went completely in the money. It's a 2.5 spread width difference, right? 7.5 minus 5 is 2.5. That would still allow for $1.50 profit. That's still over 100% return on risk. So a few different trade ideas to consider here that we could look at on NVDA, and it just depends. Do you want more the theta decay route, where if it just stalls here and chops, you could still take a winner, or do you want to play the more directional route with the bullish divergent bar and really set yourself up with a nice risk versus reward scenario to play the more directional move? And certainly, if I do open a trade, I might do it in the $500 challenge account, depending on what setup we do. But either way, I will definitely send that out to the small account mentorship and let you guys know. But that's kind of the main one on my watch list for this week, guys. So that is it that I have. Otherwise, my plan for this week is to continue to do scans on both bullish and bearish setups, kind of have a list put together. That way, if the market does start to break below these support levels and we're getting a stronger pullback due to weekly exhaustion, I have some ideas out there prepped for that potential bearish sentiment. But at the same time, if we hold, if everything's looking solid here, we start to get maybe some more bullish indicators down here, then I have pullback entries set up to play for the bounce to the upside. So that is my main focus for this week. But I wouldn't be too surprised, basically, that we might find a little bit more chop in smaller ranges until we get that data later in the week. So just be mindful of that, guys. As always, may the trade be with you, my fellow Jedis. For those of you over in simpler trading, I will be back on at 11:30 in the options room, which also means I'll do a broadcast in the small account mentorship, and we'll talk there. For those of you over on Twitch or YouTube, thank you so much for joining me. I'll be back on Wednesday for a full hour at 10:30, where we'll walk through some more setups and I'll answer whatever questions you guys have around the market. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you all.